All right, so now I'm joined by Pankaj Mathpal, who's the MD of Apna Money Managers, to answer all of your questions live. Pankaj, good evening and welcome to the show. And okay, so let's begin. Let's take Lakshman's question, and he has sent across his question from Denmark. He has an SIP of 10,000 each going on, and he wants to know if any exits in terms of mutual funds from this portfolio is advisable or not. He's got HDFC Flexi Cap, UTI Nifty 200 Momentum 30 Index, HDFC Retirement Savings, Quant ALSS, Tax Saver, Quant Active, Motilal Oswal Mid Cap, Nippon India Small Cap. He's got Motilal Oswal Nifty Micro Cap 250 Index also. So I don't have any more details beyond this, and I don't have him on the phone line also. So limited set of information for you to do his financial planning. But the choice of funds, I think that looks good. What will you say?
Kavita, good evening. I agree with you. All the funds are good. And in their respective category, they are the best performing funds. But because I do not know how long he wants to stay invested, what is his investment horizon? So simple answer, if the horizon is more than 10 years, Lakshman can stay invested in these funds. But if it is lesser than 10 years, so from the funds like Motilal Oswal Nifty Micro Cap Index, as well as small cap fund, he should reduce some exposure. That's the only advice. Otherwise, funds are really good. All the best.
Any specific reason why you want him to reduce his exposure in the microcap 250 index?
See, as I mentioned, if the horizon is less than 10 years, because we know that small cap, micro cap, they have more scope of volatility. So that is why means there may be higher risk. It is a very aggressive portfolio. Not only small cap, micro cap individually, but he also has multi-cap fund, and through that fund also he has exposure to small cap. So if you see the total portfolio, the allocation in small cap, micro cap is larger. So that is why my suggestion, if the horizon is not very long, he should reduce exposure. Otherwise, he can stay invested.
All right. So that's the word for Lakshman. Let's take Tapas' question. He is from Bangalore, 55 years old, and he can invest 20,000 per month. And at the age of 60, which is 5 years from now, he says that he wants to get 20% return of the amount every year he has invested, and he wants to just earn more than his fixed deposit. That is what is his aim from this particular portfolio. Again, we don't have him on the phone line and very limited detail, and we are supposed to do his retirement planning. So let's just go with whatever information we have right now, Pankaj. I'm sure it becomes very difficult to give a correct answer, but I think he's into government service, so there could be a pension that he might be getting, and I think that is why he's secured on that part at least.
Kavita, see, if he wants to withdraw 20% of the total corpus, that is possible. But because we know in mutual fund returns are not guaranteed, and expecting 20% return on year basis, that is not the right expectation, I'll say. So if somebody has a portfolio and wants to withdraw systematically 20%, in that case, it may happen that the total portfolio will be exhausted after some years, but the withdrawal is possible. But if somebody wants to plan in such a way that only profit should be withdrawn regularly, then you should plan to withdraw something like 0.5%, 0.5% every month, so that if you get returns of 10%, 12%, even that your principal amount will be safe, and you can increase your withdrawal also year after year. So that is the suggestion, that as he mentioned, that 20% returns every year, that may not be the right expectation. But because the horizon is only 5 years here, so I'll suggest some funds where he can invest, like Axis Nifty 100 Index Fund, which is a large cap index fund, HDFC Balance Advantage Fund, Motilal Oswal Large and Mid Cap Fund, and ICICI Prudential Multi Asset Fund. So these will be the funds according to this investment horizon. And after this 5 years, then he can even switch from this large and mid cap fund and Nifty 100 index fund to again a hybrid fund, and then he can start withdrawing regularly.
All right. Let's move on to Keshav Prasad's question. He has SIP going on for mutual funds. Pankaj, he's got Nippon India large cap. He says that he's investing 30,000 in that. Motilal Oswal mid cap 18,000. Nippon India small cap 12,000. Parag Parikh flexi cap 12,000. So again, we don't have the time horizon for how long he wants to be invested. But then assuming it's 5 years and more, which ideally should be the case because he's got a large cap, mid cap, small cap and a flexi cap. So that way, I think he's taken care of the diversification rule already. But and also, if you see the exposure, it's the highest in large cap, and then it's mid cap and small and flexi cap. You know, he's divided it very smartly. So yeah, what's your take?
Kavita, you will agree with me that see, we have to see two things. One is that how are the schemes? Second thing, are they suitable for you or no? So when I know that risk appetite, investment horizon, it becomes easier to advise based on those information. But here, if you see portfolio, really good. Number of schemes are also limited and good schemes in their category. But as we can see that exposure in large cap is higher. So again, if he doesn't want to take much risk, it's a very good portfolio. But I'll say if he wants to, if his horizon is longer, and wants to reduce some exposure,
stop you for a bit. Pankaj, I will stop you for a bit because I have Keshav Prasad on the phone line with me. Good evening, Mr. Keshav. How are you doing, sir? We were just talking about your question that you had sent us. I want to know what's the investment time horizon that you want to stay in these funds for?
5 to 10 years.
Okay, so there's again a gap of 5 years. So can I make it 10 years directly?
Yeah, 10 years.
Okay, because you know what happens is the choice of funds and your risk appetite also changes if it's just 5 years and more than 5 years, then maybe, you know, you can go slightly more higher. All right, so Pankaj, we've got the clarity on the time frame front.
Wonderful. Keshav, you have a very good portfolio, good schemes in your portfolio. You have investment in large cap, mid cap, small cap. My suggestion, as you mentioned that you want to invest for 5 to 10 years, you can reduce some exposure in Nippon India large cap fund. And you can add one value or contra fund to your portfolio. ICICI Prudential Value Discovery Fund or SBI contra fund can be a good choice. So only small correction, small change. Otherwise, portfolio is very good. All the best to you.
Keshav, is there anything else you want to ask Pankaj?
Just one more question.
Okay.
This is one part of my portfolio.
Yeah.
I also have got another portfolio. But I'm not able to understand how exactly I should split. I have a arbitrage fund.
Okay.
I have a balanced advantage fund, and I have a multi-asset fund. I don't know how exactly I should split between these three.
No, but then what's the total amount that's going in these funds? And again, you want to be in these funds for 10 years like the earlier portfolio?
Yes.
What's the total SIP?
This is not SIP. These are the lump sum ones.
So what's the total lump sum?
Lump sum, in arbitrage, I have 17.5 lakhs, but I would like to keep that as a parking place where I possibly will be able to move my funds around.
Sure.
In the balanced advantage, I have about 3 lakhs. And in multi-asset, I have got about 11 lakhs.
Okay. Pankaj, any comment?
Yeah, definitely. See, as you mentioned, that arbitrage fund is for like contingency. You want to park your money there. It is suitable for that. And the balance advantage fund invest in equity and debt. Multi-asset allocation funds invest in equity, debt, and gold as well. And because, as you mentioned, that your allocation in multi-asset is higher than the balance advantage fund, you can stay invested, and the ratio is also perfectly all right. Means arbitrage fund is means the allocation is much big, but as you mentioned that you need that money for some reason, then it's okay. You can stay invested. Otherwise, you can switch from that fund to again multi-asset allocation fund or diversified funds if you want to stay invested for long term.
Right, Keshav, all the best, and do incorporate the kind of suggestions and recommendations that Pankaj is giving you. And on that note, Pankaj, thank you so much for joining in and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID, because the only show where you get all your financial portfolio queries answered live is the Money Show. So note down the WhatsApp number and email ID and send us all your questions. Thank you so much for watching. Goodbye.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.